Okay, as we come into what is widely regarded as the biggest week for earnings, I want to update you on what's happening with the overall markets. Not much has changed from this week to the next. So, this is going to be kind of a quick section here. SPY. Last week we talked about the target being acquired, that we believe that target was acquired right before, I want to say probably about 565. We hit that upside target. We were looking for somewhere between 550 and 580. And last week we said that if this area was going to be confirmed, we were going to need a break below 550. Well, that's exactly what happened. Last week we broke below 550. We actually went below 540 on SPY, had a little bit of a rebound. Now 550 is becoming, it went from being support, now it's becoming resistance as the market is kind of right around that area that we're seeing here. So I have 550 support broken. Now it becomes 550 resistance. That's the number that we are going to pay attention to. Moving to bonds, here's a chart that flip-flopped. All right. For several weeks, we've seen downtrend, downtrend, downtrend. And I did mention, even though the downtrend was in full force and that we were looking for lower targets, that if the bonds rallied, that we might change our tune. And that's what ended up happening. We got above the low 90s. In fact, earlier today, we gapped up above 93.45. And so now what's happened is that longer term downtrend has shifted to a shorter term uptrend. And we're looking at resistance at an upside target of about 95. That's pretty close to the highs that we saw back in June. So if we exceed those highs, you might get some short covering going on there. But the next chart I want to show you is fighting with this one right now. All right. So remember, if TLT goes up, that means that yields are coming down. We are awaiting some further news, but more than likely we're going to see rates, at least if they don't stay still, start to be cut as we get closer and closer to the end of the year. But this is an interesting chart I want to show you now. This is UUP. This is the Invesco Double Dollar Index, and we saw that move to the upside. Now, it's saying that we may have a target that's already in. And while that is true, and you see this area here, it shows a 41% extension, we have had a pullback. Now, as long as we don't pull back below 28.50, which was the pullback lows back in May, then this target's still in play. And that target of just under $30 for UUP, again, is still a valid target. But what I'm seeing here is that we got a little bit of a gap up this morning and then a sell-off. UUP is gapping up. It's gapping up, but TLT is also going up. These two charts cannot go up together for very long. One of them has to break. And if we truly are going to get lower rates, which will be a further move higher for TLT, that should push UUP lower. Now, if we get some inflationary data in and UUP continues to kick up, we should see TLT go lower. So right now, we've got both bonds and currencies kind of fighting each other. We'll see who wins that fight very, very soon. USO, we've been talking about this for the last couple of weeks, that the highs were likely in, seasonally bearish. Last week, we said we were tracking lower. We were at 77.50 last week. We're down into the 75 range here today. So continuing to track lower, we see 70, all right, 70 as the first target, and then possibly into the high 60s as well. So keep your eyes on that one. Again, there's no technicals here other than mean reversion. But really the big thing we're looking at is that seasonality index, which is bearish now for the next several months. Gold, I mentioned this last week that there's possibly a target that we're looking at 250, but is GLD running out of steam? All right, we still have that upside target of 250, but take a look at the area that we see as support. A break below 218 would send GLD and the yellow metal lower. We see 210 as the next support level for GLD. And there are some seasonals in gold over the next 30 days that are potentially bearish. All right. finally, here we go. What was going on this weekend? So Trump was at a Nashville Bitcoin, or spoke at a Nashville Bitcoin conference, and there was this concern that this was going to be a bullish, that he was not going to say anything bearish, and it turns out between that and I believe also Robert Kiyosaki was mentioning comments about um, Bitcoin being the digital asset that you want to own, that the US dollar is just going to continue to get cheaper. If interest rates go lower, that's going to be the case. And that pushed Bitcoin up above 70,000 once again. It touched 70,000. We have not been at 70,000 in over 6 weeks. It was the beginning of June was the last time we saw 70,000. And of course, we saw 70,000 become 55,000. Now 55 has become 70 once again. It touched it early this morning, has sold off. Again, we'll see whether that's a meaningful sell-off or if it's just waiting for the next move higher. We are hitting that 70K area again and again and again. Eventually, that door is going to open. You can only knock on that door so many times before the door to new all-time highs is opened, and I believe that is going to open very soon. So, for our overall market takeaways this week, it looks like this. We're moving past politics. All right. Everything that was unknown last week is becoming known this week. We are moving towards the earnings end. We're getting over the hump this week, which is the sweet week of earnings. And now moving into earnings, and now the markets are going to be more digestive of private companies and earnings reports. Bonds flipped from bearish to bullish this week. Gold could possibly be correcting for the short term. And of course, crypto hits 70K off of the BTC Nashville convention.